2024 has been an excellent year for stocks, and if you want a confirming fact about that, the S&P 500 has been up about 19.5% year to date as of November 1st of this year. Yet, what can investors expect from owning stocks going forward? Our chief equity strategist and economist, John Blank, is here, hopefully, with the answer. John, that's the $64,000 question. What can investors expect for U.S. stocks going forward? Continued rally?
I think so, Terry. That should be our base case until otherwise noted. I did some work on recession charting this morning, and 1% and 2% probabilities were showing up. They were rising from 0 to 1, but that's obviously slight and very low. And we got the initial unemployment claims this morning. They are also very low. So if anything, the Fed's going to cut less than more, and that's because the economy's strong, Terry, and that's got to be good for stocks.
So that's the main driver, the main support there for the rally?
I think so. I think you've got to be mostly about the economy because that drives earnings, and then secondarily about some Fed rate cuts.
Speaking of earnings, what role do you expect earnings to play going forward?
I think we're going to get double-digit returns on quarterly earnings, 10 to 14%, and that is, going to mirror the returns we can expect out of the S&P 500.
What about that V word, volatility?
We will see, Terry. We've got a new administration, and we still have got no word about the Treasury Secretary, which would give us an indication about a trade war or other things that would happen. So I got to take a pass on that question.
So am I hearing that you don't see Fed Chairman Powell's recent signal that the Fed is not going to hurry to make interest rate cuts as a negative for stocks?
I don't think so. I mean, we've got to imagine the Fed is going to, have many more meetings and many more scenarios playing out. And until we get a summary of economic projections, it's been January-ish, I suppose, we really don't have a reset for the Fed.
All right. What about NVIDIA's recent earnings report that was just out a day or so ago relative to the AI trade?
Well, that's the thing, Terry. This is totally independent of the Federal Reserve System. It's a technical transformation, and they are calling for trillion-dollar spendings on data centers over the next year or two to reboot and refit and all these different groups for these big Blackwell chips that NVIDIA is selling. So, again, that's got to be bullish for even construction along with the semiconductors.
So what's your 2025 S&P 500 target?
I think you can get into 61, 6,200, Terry. We're about 58, 59. I think it might be less than this year. We've had a good year. I'll be modest in my assumptions here.
And which sectors do you expect to lead the market going into the new year?
I still like the industrials, and I still like tech, Terry. You got to stay with the tried and true hand that's played so well over the years. Having talked about NVIDIA, there's just so much downstream software development and analysis and networking tools that have to come with it. So you got to like tech.
And what do you see for the international stocks as a group?
It remains to be seen, Terry. The trade war issue needs to resolve itself, and if there are trade wars, it's kind of a negative on the international stock markets, particularly the currencies that we buy them in will go get worse. So it all depends on the Treasury Secretary, Terry.
All right, more large cap strong buy stocks on your radar include Ingredion, Elastica, and Leonardo DRS Inc.
Yeah, these are great stocks. Let's talk about Ingredion, INGR. It's just an astonishingly great metrics. Number one ranked stock on the short-term strong buy level, A for value, A for growth, and A for momentum. And you've got a price-earnings ratio of 13.4 on the stock, which is not that high. We got a nice pullback here at 142, and we got a target price of 163, Terry.
And Celestica.
Celestica looks a little rich to me. It's been rallying like crazy. It's one of these contract manufacturers for electronics. This is exactly the type of stock that moved up with NVIDIA. It was, down in the $12, $15 range, and now it's 87 with a target price of 100 because of that, need for additional services along with that AI drive. So Celestica, I'd be more of a seller than a buyer, but this is really one to know for what it did for the AI business.
And Leonardo DiCaprio. No, I'm sorry. Leonardo DRS Inc. My feeble attempt at humor.
Yeah, this is, it develops and manufactures advanced defense products for the U.S. military and intelligence agencies and our allies. So this is one of these advanced sensing, network computing, force protection, electric power for the, field, forces out in the field. And if you bought this, during the start of the Ukraine war, it was $10 a share, where you could buy it $35. Now we got a target price of $40. It's been a number one ranked stock because it's still getting upgrades to its estimate revisions.
All right, our chief equity strategist and economist, John Blank, on stocks. With John, I'm Terry Ruffalo. And here's something to consider, a just-released 5 stocks set to double report, where Zacks experts announced their single favorite pick with the potential to gain 100% and more in the months ahead. You can download this private special report that names these stocks and spotlights why their upside is so exceptional at Zacks.com/promo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute, an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.